What will the future of real estate look like? Is conventional real estate dying? Join us while we dive into conversations to explore that very question and attempt to demystify current and potentially new real estate trends with the disruptors themselves. Hi, Natasha. Good morning.
Good morning.
I'm so excited to talk to you today and to hear about some of the exciting things that you have coming up. Can you give the listeners just a little bit of background on who Natasha Phipps is?
I am located in Calgary, Alberta. I am a mom, a wife, a real estate investor, and an investor-focused realtor. I run a team here out of Calgary. We do all kinds of real estate transactions, commercial real estate, as well as property management as well.
You're juggling quite a number of hats. How many people are on your team? It's a fairly large team that you're running here in Calgary, if I believe.
Yeah, there's 6 of us now, and we have 2 administrators as well who kind of help in the background. Lots going on. And then most recently, we've just launched a REIT as well in 2022. Just finished that in December. So that was a very big project for last year that we're excited to kind of hit the ground running with this year.
I really cannot wait. That's part of the conversation for sure, because it's so exciting. And once we get into that, there's parts of it that I'm like, oh my gosh, I feel like it differentiates from all the other REITs for a variety of reasons, but we'll get into that. You mentioned that you're investor-focused realtor. How did you decide to niche down on something so specific?
The reason I got my real estate license, I was licensed in 2008 originally, but prior to that, going back to the year 2000, 20 years ago.
Oh my gosh, don't say 20 years ago.
I was 20 years old, not even, and had bought my first property. My mom, she was a banker, she is retired now, but she was a banker for her career. I grew up out in the country outside of the city. And of course, as you grew up, you want to move into the city. Mm-hmm. And so my mom really knew the power of leverage and a mortgage and paying down debt and not paying down someone else's debt. They were very supportive in helping me acquire my first property, which was a new build. I went through the whole process of building it. Only kept it for maybe 12 to 18 months. But the funny thing is when I sold it, I walked away from it. And I think I made no more than $15,000. But to me, that was like a substantial amount of money. It really just got me interested in the market. My family has a construction business. So still to this day, my family's business is Bow Valley Exteriors. They do exterior finishing for new construction in Calgary. So we're pretty tied into that space. And from there, from the next 5 years, I was kind of just buying and selling for my own residence. And at that time, you could not make money in Calgary.
Those were the good days.
Those were the good days. And I mean, I think the last condo I sold before I was licensed was, I walked away with a 6-figure check for someone, in their kind of early 20s. That was a lot of money. I was working in the oil industry then. I was working for Nexen while I was going to university. And I was making more just buying and selling real estate than I was in my full-time job.
That's a good catalyst.
And the real kind of thing that tied all that together was why I wanted to niche down was once I learned what I didn't know, and I really was just lucky before that in terms of what I was buying and selling and following the market just on instincts. But what I learned later was that I didn't need to sell all of those properties. No one told me then I could own more than one property, that I could refinance to tap into that equity. No banker, lawyer, mortgage broker, or realtor ever once put that in my ear. And so going into real estate, that was my focus, that I wanted to draw on the experience that I had, but also learn. It's a constantly moving target in real estate investing and apply that to my business.
It's quite fascinating. There's so many different ways of doing things. And I don't know why people aren't more transparent with the knowledge that even you just shared now, because there's a variety of different ways and approaches depending on your goals. But nobody seems to ask about, hey, what's your goals? Or, where do you want to be in 5 years? Because that kind of all ties into a holistic approach to real estate. So I think what you're doing is pretty awesome. And obviously you've found an awesome niche to capitalize, and you've expanded your investor reach as well. You're not even Calgary focused. You kind of have spanned the country. Is that correct?
Yeah. I don't know. In 2015 or so, I started going to events all across the country and building that coast to coast network. knowing that, I mean, and we've been through recessionary times, knowing that Calgary is not necessarily always it, but also wanting to like see what else is out there and build that network. It's who you know, not what you know a lot of the time. And having that network goes a long way. And a lot of times, even when Calgary's maybe not the splashiest thing in the news, for investors, it has made a lot of sense here. And we do a lot of educational content and events of our own as well, and then travel to a lot of events too.
Yeah, I've attended a few of your events, especially over COVID via Zoom, and they've been very informational. And I think you touched on a key point. It's maybe not what you know, it's who you know, but who you know can help expand your knowledge base, which again makes hopefully better investment decisions down the road.
Absolutely. And for the most part, the investor community is pretty like forthcoming with information, especially now since COVID. I mean, like there's no shortage of groups and podcasts and there's so much information out there, which just wasn't available, 20 years ago.
Yeah. Don't you wish you had all of these resources back then?
It's kind of interesting to think how I would have maybe handled things differently, but that is kind of what it is. And I'm a completely open book with anything I know at any time. And to your point, like that should be the first question we're always asking ourselves is why, and what are we trying to do with this? Whether it's a primary home or an investment, that why should be a part of the discussion at the very beginning, because your professionals might know something that you don't know.
100%. And if you don't divulge that information, how the heck are your professionals that you have in your corner going to be able to help you out effectively, 100%. I guess. Yeah. So exactly. You've been around the industry, let's call it 20 years, either just investing yourself before you got your license and then expanding your team. So you've probably seen lots of trends either come and go or lots of various changes in the industry. What are a couple or 1 to 2 that are really noteworthy for you in the changes that you've seen?
I think a big thing to remember, I mean, obviously, the thing about Alberta is we follow the real estate cycle, at least previously so far, like a textbook. And hopefully where we're at right now, we will not kind of repeat that moving forward. But the real estate cycle that we've been through at least a couple of times now in my career, from start to finish in terms of recessionary times, recovery times, boom times, and bust times. The important thing to remember is, and this goes for other parts of the country right now that are experiencing some very challenging market conditions. Speaking mostly to investors, I guess here, there is opportunity in every piece of those markets. Just because something is changing doesn't mean you can't no longer, invest in real estate or find good opportunities, but you must have the knowledge to know what strategies to do when. And that is the mistakes that people talk about. Real estate bad news stories are usually
the headlines.
Implement the wrong strategies at the wrong times. That's something to remember. But in terms of what's changed, my God, as a realtor, everything has changed. Nothing is the same as when I was first licensed.
Ain't that the truth, hey?
Yeah, it's just vastly different. I barely leave my house now. It seems like I'm home a lot, even though I can go out and do a lot more now. But really, I feel the industry is a lot more flat, kind of like globalization. It's not just about Calgary at all. It's tied to the entire country now. And for buyers and investors and just people looking for a place to live, I feel they're a lot more comfortable now looking outside of their own backyard than they've ever been.
Yeah, so I think we're seeing that with the huge migration numbers, right? Or even investors from Ontario or other parts across the country, and arguably maybe North America. You would probably know that more so than anyone, but the news and the rumbles within the real estate community is saying that we're getting lots of folks wanting to invest in Calgary for a variety of reasons. Right now, our prices are probably more attractive than other parts of the country.
Where Canadians are struggling right now is interest rates, affordability, and inflation is drowning people. And so same as when Calgary and Alberta went through a recession, what happened when all of a sudden our pocketbooks were a lot tighter? Everyone pushed out to what was affordable. They went to outside of major cities. Everyone was trying to make their dollars go further. And this is no different. And what I have seen a lot in our team is not just people moving for the sake of wanting a more affordable lifestyle, which is happening a lot, but I'm even seeing first-time home buyers buying an investment property as their first property because they want to own real estate, but they don't necessarily want to move. And they're buying from across the country without coming here, building the relationship with the team here on the ground and having us take care of everything from start to finish. Like these are young couples that's their first real estate acquisition. This was not maybe intentional, but that's what's happening just because it doesn't make sense where they are.
And your team is positioned very well to capitalize on something like that for those maybe new investors that are priced out from buying a primary residence in their current location, but they can go to you and you're kind of boots on the ground and you're full cycle. You help them with the acquisition, property management, as you mentioned, and you're kind of, I'm sure, providing timely updates to them. You've created essentially what you wanted 20 years ago when you started. Yeah, it's great.
I didn't really think about that, but yeah. We have plenty, dozens, probably hundreds of people who have done that with us. Mm-hmm. And I'm going to kind of preach a little bit here. It's very important, no matter where you're buying, that the people working with you have your best interest in mind and know the market, most importantly. So if I was going to buy something in even Edmonton, which isn't that far from Calgary, I don't know Edmonton well enough. I'm going to talk to one of my realtor friends in Edmonton that knows it really well. The difference when clients come to us is that we want their business for the next, 30 years. Mm-hmm. Their success is paramount. And if we're going to be managing the property, we care a great deal about where it is, who the tenants are, taking care of it. We don't want a headache either. And so we steer them in the right areas to the right types of properties that make sense for them and handle everything from start to finish. To add one note to that, kind of one thing that you mentioned, asking about what's kind of changed and what we've seen a lot of, the Alberta real estate market is very enticing for all kinds of reasons. And there is a lot of realtors outside of Alberta who are promoting Alberta, mm-hmm. which is fine, but it needs to be understood that they are not licensed in Alberta, nor do they probably know the city where you're looking at all that well. In Mo, I'm not going to say that's everyone, but my top advice is find the right person for the job. Just because someone has a license does not mean they're the right person in every market.
I was going to touch on that. We have an increase in folks from, let's call it the Toronto, Ontario region, who are positioning themselves and doing lots of pre-sales. Do you want to speak to some of the risk perhaps associated with somebody sort of blindly buying a pre-sale that may be a little bit priced over market value? Because the Calgary condo market up until the last few months has been fairly depressed, but yet pre-construction condos were selling so quickly for kind of expensive. And not all of them, this is a generalization, but perhaps you could speak to maybe the risk to folks if they are looking at something like that.
It's a really good point. I mean, we get presented opportunities all the time, and just because something is for sale doesn't mean we promote it. It's very important that things are priced appropriately. Now, the Calgary condo market is the last kind of sector of the market to even start, reaching some sort of positivity. I think as real
I love how you had to search for the word there.
I know it's been tough. It's been really tough. And we've had negative property values in condos for many, many, many years. And so we have to be very careful in the condo sector. So you're right. It's not every single condominium pre-sale opportunity is bad. But when you're purchasing blindly from another market and you don't have someone who knows the area, you have no idea on property values, nothing to compare it to. You don't know the location because the person referring this opportunity to you doesn't really know it either. Maybe they've been here, maybe they haven't, but they don't know it like someone who lives here does. And just because the price looks good compared to your market does not necessarily mean that it's priced right for here. And they make these incentives very attractive, and some of them make sense and some of them don't. They are leery of. So again, find the right people who know the area and can do an analysis for you, look at sales in the area, because we've been caught with this before. And we're not the only market that's been caught with this. This has happened in other markets too, where if you acquire a condo and it closes in 2 or 3 years and say it's not worth what you paid, then that's a huge risk. And maybe when you acquired it, you didn't do any of that analysis. You didn't look into what the values were then and where they might be going and look at the history and that kind of thing. The risk there is if it's not worth what you paid or worth significantly less, then you are on the hook for whatever that differential is. And I had one client in 2015 who was from Europe. They actually flew here and I met with them. We looked at condos for several days. They really didn't want to take my advice when it came to I really wanted to buy. They bought 3 condos downtown at that time, which was a terrible time to be buying condos downtown, a pre-construction condo.
I am one of those people, pre-licensed. bad breakup.
Yeah.
I was like, I'm a woman,
Oh,
hear me
no.
roar. I'm going to live in a 1-bedroom condo forever by myself. And
Yes.
when the condo came on the market, times changed. I was getting
Yeah.
married, having babies, like life
Yeah.
changed. And I was like, oh crap. And the condo market was in the toilet. So this was pre me
Yeah.
being licensed, but people make
Yeah,
emotional
exactly. You
decisions
do.
sometimes.
Of course. And like we all make mistakes. Like, don't get me wrong. I
Yeah.
have those too. But let's look at what's happened before. And
Mhm.
what happened here in Calgary can happen in other markets and likely will, and
Mhm.
likely is going to in the next couple of years. In some of the major Canadian cities, a lot of these pre-construction deals, maybe that I don't want to like guarantee
Mhm.
that, but that is a very high possibility with market values going down. So know the area, know the growth that might be happening there. Does it make sense? And working with someone who knows pre-construction, knows the construction industry in that market, and can do that homework for you. The
And is a
only
trusted
thing,
advisor, right? Like they have your back. You need somebody who is going to tell you that's
100,
maybe not a good idea, or is this really what you want? Or,
yeah,
and give them the tools and the information
sure,
to make informed decisions. Because to your point,
yeah,
really good realtors, and there's tons of them out there, they want, to have that relationship and build that
yeah,
rapport so that, you're constantly working together over the next 20, 30 years, whatever that
exactly.
may be.
Well, and especially for an investor, I mean, they're going to
Mm-hmm.
buy time and time and time again if it works.
Mm-hmm.
If it doesn't work, they are going to not be very happy with you. And to your point there, we have lots of people coming to us now that go, oh, I found you and I bought this. Can I get out of it? Or did I get a good deal? Or can you sell it for me or assign it for me? Or I didn't have a mortgage pre-approval and I just went ahead and put a deposit down.
Oh, no.
Those kinds of things, because
Mhm.
no one was looking out for their best interest. They
Yeah.
answered an ad, they filled out a form, they sent their ID in, they sent their money in, here we go. They didn't actually get a consultation with,
Mhm.
a trusted advisor or a team of people that will have their best interest.
And so this is probably a nice pivot over to your new venture, because not only now are you looking at it from just a real estate transaction full cycle, you've now branched out to WealthShare. So do you want to provide a little bit of an overview of what it is? And then what made you and your team, because there's a leadership team I'm aware of, what made you guys decide to do this here in Calgary?
WealthShare is a REIT. A REIT is a real estate investment trust. You can think of it as a pooled fund of investors who engage the management team, which in our case is WealthShare, to invest their funds into whatever type of real estate or acquisitions that REIT might want to acquire. Like anything, I really believe in diversification, reducing risk. Having a little bit of everything is kind of my style, even though I love real estate. And I talk to people about that all the time. Like, please diversify, look at other markets, look at other property types.
Mm-hmm.
And this is no different. This idea sort of originally came as a pipe dream in that it's a huge hill to climb to get here. But I talk to a lot of people who, they want that great tenant, they want that great location, but they maybe can't afford that and they cannot get the pre-approvals that they need, or they just want to do zero work, have
Mm-hmm.
no involvement at all, and just give me an update, every once in a while kind of thing. Mm-hmm. The other thing is a lot of these REITs, and I talk to a lot of people who look at passive opportunities, whether it's REITs or private lending, they often don't meet the minimums that a lot of these companies require. It kind of got me thinking, how can we provide opportunities to Canadians that are not already in the wealthy bracket? And so that was kind of what started this wheels in motion for me over the last few years, but I had no idea, how that would all come together or if it would.
But you did it. So well done.
I did it, yeah. And it all came because of one property, and it kind of has led the charge. Yes, the Bergen. Yeah.
Yes, I was following that and so interested in it. And again, was, as somebody who attends your events every now and then, I was like, oh, that looks so cool. Like, wonder if I should, and sitting on the sidelines, and what does it mean once you're in? So that's very interesting.
This is a 21 unit building in Southwest Calgary in Mission. So it's a new building. It's only a few years old, prime location, great tenants, all the things that people would want for nice looking real estate. We're not doing a huge renovation or development. The more there is to do with a property, whether it's redevelop, tear it down, build, renovate, the higher the risk is. And our kind of mandate is accessibility for Canadians, for keeping our minimums reasonable for investment, but also we're not, at least now, unless that changes, in the future with how the state of the world is, we're not looking to take large risks. We're not looking to take too many uncertainties on, given the interest rates, the inflation, the getting prices of materials and trades and all that is so
there's
challenging.
enough other uncertainty out there. And as an ex-risk manager, you're speaking like music to my ears. My husband and I often kind of battle a little bit because his risk tolerance is way different than mine. So,
which is totally okay too, right? Everyone has their own kind of risk tolerance there. So that's one thing we wanted. So we acquired the Bergen. We did not have the REIT set up at that point. So we raised the money through our network to acquire that. We had set up a limited partnership, which we could talk about an hour just on what that means. But essentially, we had a group of investors come together to acquire the Bergen. And what I learned in talking to dozens of investors at that time was most of them wanted to use registered funds, their RRSPs, their TFSAs, their LIRAs, to invest in this type of property, because lower risk assets like we're talking about also mean just more kind of slow and steady returns, right? Yeah. You're not getting huge payouts monthly necessarily.
It's not necessarily sexy, but it's safer.
Exactly. It's not sexy. Keep it between the lines and let it do its thing, right? And so that was a huge path to learning and seeing, okay, how do we use registered funds? And there is, a whole host of things that took place. But what we came to was to use registered funds to make it accessible to a large part of Canadians. It's not open to everyone. There is eligibility requirements, but they're quite reasonable. And to use registered funds in a limited partnership, long-term buy and hold type of property like we want to buy, you have to go to this REIT setup, or a mutual fund trust is another term for it, real estate investment trust. So at that time, our team, we kind of just, all looked at each other. Okay, do we want to do this? Like, this is a massive undertaking and we're committing to this for the rest of our, careers. And it was something that just aligned with all of our values and mission. So we all have unique experience in the real estate investing space, bringing that to the table. But that is what kind of aligned us all, was those similar values and core beliefs when it comes to what investors should have access to.
It's so refreshing. And you're so honest about trial and error and learning through doing. And I think that resonates with people, right? And then makes people excited, and you are making it accessible to Canadians. And from what I understand, you have a very strong corporate social responsibility type foundation tying into your values for the REIT. So do you want to speak to that a bit? And do you think that there's going to be some naysayers out there that like, oh, you can't have strong corporate social responsibility in real estate? It's like a shark world out there. You can't do that.
Yeah, I mean, I totally get that perception, right? Like, once you start going up to this sort of level, the investment community of, buying your own single family assets and stuff, it is very vast and large. Once you start going up to this level of REITs and funds, the number of people doing that are accessible, that are willing to talk to you about it, does absolutely shrink. I struggled with this even a year ago, trying to find people who had the experience to bring on board even to our, legal team and accounting team. We're in a pretty niche part of real estate now, but the values don't change. Whether you want to, call me and talk about a single family property or the REIT, I'm always an open book with what I know, what I can say. And so that accessibility is a huge thing. And that also ties into the communities that we invest in. Like, we want to be a positive impact on the communities that we invest in and be proud of the assets that we own and acquire. So those values go right down to our tenants, who are our core customers here, who make all of this happen. And so making sure that everyone in that line feels that same way, that we try to do the right thing as much as humanly possible. And we do care about the investor, whether they're investing 5,000 or 500,000, they are equally important to us, and we will work with them as well.
That's a testament I cannot wait to continue to follow this. And I've signed up for all of the newsletters because I do want to stay in the loop on this. But what I'm hearing you say is you're also building a legacy for your family, right? You've continued a bunch of step changes over the last 20 years. And I think it's something that your kids and those even involved in the leadership team are going to be very proud of, because you are helping Canadians across the board. And when you care, people feel that and people will do the right thing. So I think it's so cool.
Thank you so much. It is a family endeavor, I'll tell you. I mean, my kids could probably tell you more about a REIT than a lot of people could, because it's like, this is a family endeavor. There was a huge time and resource sacrifice by our family, which I'm happy to do all day long for something that energizes me and inspires me and is building something that's bigger than just me or just our group of management. So that's a really exciting component to it. And I think as entrepreneurs, you have to find what does that for you. Like,
yeah, what lights you up?
Yeah. Like I have to kind of always have that something, right? I struggle with a lot of health issues. And if I don't feel inspired and excited, I struggle big time with my energy and with how I feel. And so why not take the risks, put the hard work and energy into something that energizes you and drives you and is bigger than yourself.
Whether the kids know it or not, this is all rubbing off on them. So they're getting lots of great life skills. And I think it's good to watch mom and dad or some family work hard and be successful. And hopefully that encourages the next generation to kind of want to do the same and help your community and, make positive revenue. You can have it all. So I think it's a really good example you're leading.
Thank you.
I think that this is a pretty big shift change in real estate. Are there any other sort of emerging trends that you see from your perspective, whether investing or from a larger macro kind of perspective?
Canadians in their 20s, obviously when I was 20, like even most of my friends were getting into the real estate game pretty early, and it's getting harder and harder and harder for people to qualify. And so what I think is happening and will kind of continue to be a trend is these types of funds and REITs, and there's crowdfunding for real estate now. There's all kinds of ways to kind of get into real estate. I think that is just going to continue to blow up as technology spurs that. My younger nephews and cousins and stuff, like they don't have the same necessarily need to go out and own, and they don't need to be tied down, and they want to be more kind of mobile possibly. And so I think this sort of like fractional sort of ownership of real estate in whatever facet that means is really going to continue. So I think that's going to be a massive change that we're just seeing the iceberg, the tip of the iceberg on that.
Yeah, I agree. There's lots of companies out there that I think Divvy is one. They're based out of the States that do fractional ownership. We're seeing lots more of multi-generational type things happening, or friends doing an investment property instead of buying a primary residence. So it will be curious to see how it continues to trend in the next, like 5-10 years.
Yeah, I'm totally blanking the company. I feel so bad. They allow you to invest in real estate for as little as $1. Like,
oh my gosh,
$1. Those platforms exist now, and the legislation is in place that exists. That was not allowed 20 years ago or 10 years ago. There was no legislation in place in Canada that would allow that sort of technology or group to come together. So I think what's going to continue to happen in the investment space, not just real estate, just investing period, is with more and more information being out there, the accessibility of education. I'm a big believer in free education. I don't charge for anything we ever do. And that is why, because that is our value proposition. But the accessibility, the younger generation is learning that they don't need to wait until they have X amount of dollars in the bank to invest. They can invest their $200, their $500, their $1,500 starting at 18 years old. And
similar to investing in the stock market, really.
Yeah, exactly. And the apps and the programs and the technology makes it so easy now. It used to be so hard. You had to go through your bank. You had to do, a minimum transaction. Fees were also something that were very
the hidden fees everywhere.
Now it's a lot different. And so I think that's really going to continue to blow up. And so we might see more people renting for longer. We already are, people renting for longer than buying, whether out of need and necessity, but also out of trend.
Do you think some people are also, there's some fear mentality as well as the rising interest rates that are kind of, people are like, oh gosh, I hope it doesn't go back to the 80s. And how will we deal with 18% interest rates, which I don't think is going to happen, but you never know. It's been a crazy few years. So
yeah, that's true. Fear is a big thing, and it's something that we talk a lot about. I believe fear exists in the lack of education, the lack of knowledge, which is, circling back to the very first thing we talked about, is why you need the right people around you. And if you are feeling fearful, then I would hazard to suggest either you're not ready for whatever reason, just not be the right thing for you. But it also might be that instinct telling you that I don't have the right whatever, the right people, the right time, the right opportunity, or the right thing that's aligning with your goals or what you want to do. So I do think fear holds people back, but I also feel that this information, like I said, is more accessible than ever. And I'm shocked by what even I've met with some very young couples, like in their early 20s, that know a lot, that have just absorbed everything that is out there and are taking it to their own hands in terms of their financial literacy. Whereas, like our parents, like that just didn't exist. It wasn't possible. So I really hope that is something that continues and they take control of their own kind of financial futures that way.
So you mentioned free education. Are there some that you would recommend to maybe the listeners, or stuff that you thought was really like, holy crap, we should probably be sharing this particular training or this group or whatever, a book maybe?
For real estate investing, the biggest thing, like I said, was knowing the cycle and what to do when. We just talked about interest rates. The thing about interest rates rising is it is creating more tenants, whether we like it or not. People are delaying to buy, or they just can't afford to buy. And so in these types of more difficult times, unfortunately, this is when that gap gets even wider between landlords and tenants. And you could even say the rich and the poor. This is when a lot of ground gets made up. And so understanding that is important. In terms of education, you have to understand the real estate cycle and what that means. Don Campbell's books are the tried and true first sort of segue into this, and they still are relevant today. Nothing lasts forever is the thing also that everyone has to understand. We have seen all of this before and we will see it again. And I, like you, think that, I don't think we're going to get to that point, but we have no crystal ball. And if we are getting into this market, be smart about it. Like, have the extra funds available for those rainy days. Make sure you have the right team supporting you. Don't stretch yourself further than you are comfortable with or have to, and really be smart and strategic. In terms of groups and education, these are not free groups, but if you're serious about getting into the kind of investment space, free stuff, there's some really great Facebook groups online now. Like, if you look in Calgary Real Estate Investing is our group. It's a Facebook group and we share all of our events there. But there's similar groups in other markets and for Canada. And you will start to see that a lot of the people are in a lot of the groups. So just start being a part of those spaces, see what kind of questions people ask. And if you have a question, please ask someone. I am also involved with the Real Estate Investment Network, REIN, and Keyspire, which are paid groups, which if you're serious about kind of building that network and tapping into these kind of larger investor communities, is worthwhile if you put in the right energy and time and everything. Like anything, you get what you put in, right?
100%. I did do a Keyspire weekend conference type thing, and then signed up for the coaching. I mean, I have positive things to say, but again, like anything, like we chatted, you kind of have to ask the questions, and don't be afraid to be dumb or appear dumb, because they're there to help you. Like, that's their job.
Yeah, exactly. And even just in the free communities, like, you will be shocked at how much people will help you and want to share. I mean, have calls with people, talk to people. Everyone wants to network these days as well. So join those groups. We do monthly investment related events as well. WealthShare is too. So there's no shortage of these types of events. Of course, we'd love to have you at ours, but there is plenty of stuff out there.
No, that's great. If people wanted to learn more about you, Natasha, or connect with you or WealthShare or your team, where are some of the best places to kind of get more information and to follow you?
For the team kind of related stuff, our website is the best place to go. You can sign up there, phippsgroup.ca. And for the REIT, wealthshare.ca is our website. For either one, to kind of like just, start keeping an eye on things, just sign up to the newsletters and the team will keep you updated on events and what's kind of going on. For the real estate side, we share even off market and exclusive opportunities on there, our education and lots of stuff. Even just being a part of that keeps you in the loop a bit as to what's going on in Calgary.
I'll be sure to try to link those in the show notes. And thank you so much for taking time out of your busy day. I do know how crazy it must be to, be juggling everything. So I really appreciate it. And I will be following closely.
Awesome. Thank you so much for having me.